Hey guys, happy Thanksgiving to my American friends. Hopefully you guys get some good rest and turkey and come back and slay the charts after the weekend. Today's long setup video is brought to you by Bitunix. As you guys know, I partnered with them recently. They have the deepest liquidity, incredible trading fees, and a very good kickback for trading fees for anyone that uses my referral link in the bio. I've been using Bitunix last 4 or 5 months and the trading executions have been flawless. They have all the exotic pairs, even the coins that you can't get on other exchanges. Really a flawless experience. For my referral link, go into the bio. If you use my referral link, you'll also get lifetime access to OPUS. That's our trading video catalog. Goes over 32 videos covering everything from risk management to market structure, advanced liquidity concepts, and more. So sign up with Bitunix using my referral link and let's get to the charts. Today we're looking at Fetch AI. If you look at the chart, it's pretty wrecked, but also if you zoom out, this is kind of attempting to make a higher low on the macro, right? So again, the 10-10 wick, it kind of throws me off. But in theory, if that apocalyptic flush didn't happen, this would just be probably making like a higher low up here. So ultimately you're buying within a really strong weekly uptrend and you're buying in deep discount on the weekly. If we zoom out, you'll see that the August 2023 low got purged on 10-10. So that's a pretty significant flush, and usually that's the end of a sell program. So if we go back into, actually even before I go into the sell program, we can have a look at the weekly. So this is the weekly roadmap for me pretty much. You have a impulse, corrective wave, impulse, corrective wave. And if you look at the structure, it's aligned with a bearish cipher, which, I mean, it sounds like a misnomer, but all it is, it means that when it completes a D, it's going to start pulling back. But technically, we're in the final wave here, C to D, where you're looking for upside strictly. And again, after a 90% drawdown, why would you be shorting here? But yeah, if you look at the measurements or the ratios, you can see the impulse correction 53% within this allowable threshold. Then you have a lower low around the 1272, so that's aligned with the cipher. And then you have a projection B to C to the 1272, perfectly aligns. And then your overall pattern goes to the 786, which is perfectly aligned. So this is my high time frame roadmap where I think it's going 280. And then we could look at the sell model completing down here at the August low, August 2023. So on the we're going to visualize on the 3-day, even though it's a daily model, just because with the amount of candles, it looks a little cleaner on 3-day. But that was the origin of the sell program. Above this high, you had order pairing and then it broke down. On the daily, this ended up being, I think it was an imbalance, or you could call it a 3-day bearish order block that got rejected. And then you go into distribution 1, distribution 2, and then the sell side completes below the August 2023 low. So this is where you're starting to look for the buy side to build. And if we go back into the daily, yeah, that was an order block. So if we look at the daily, we're basically at the low risk buy within the model. You could note here on the daily, the midwick got filled and we had a really strong reaction coming out of it. That displacement created this imbalance right here. And this is going to form your low risk buy. So this is an area where I'm looking to start positioning on FET. I'm going to try to get filled slowly, but if I see that there's an obvious bottoming structure here, I might be more aggressive when I see the bids start coming in. So daily, this is kind of what I'm looking at for the market maker model. Daily in terms of structure, I'm looking at this, raid, shift, really good displacement up, and then a pullback into what we call the OTE. It's basically the 786 fib from high to low. So it's somewhere between 618, 786. You can see this one just tapped onto the 786 and reacted. Now, what did it do in this fractal? That's what I'm curious about, because they left behind this daily order block that took out the low, so they might drop it back down here. But I'm more interested in the local price action. So if we look at the 4 hour, I see another harmonic in here. It's basically a perfect Gartley. Again, with the wick, it kind of misaligns, but it's around this 618 if you look at candle bodies. Lower high, 786 completion, perfect reaction here. And even the B to C projection at 131 is aligned perfectly with the Gartley. So this on the intraday time frame is where you'd want the reaction. And if you look closely, let's say on the 1 hour, you could see this low right here, and all this liquidity got flushed here. And then more locally, you have a raid, a shift on the 1 hour. So this is time frame aligned with the daily, or you can look at it as a 30-minute order block here. Either way, it just kind of makes it more obvious, the shift. And what I'm looking for, now that we've raided and shifted, is within this dealing range, you could see there's liquidity that accumulated right here. So for me, this looks like they're engineering liquidity to get taken one more time so that smart money could get more fills before actually running it up. So everyone who entered here, I believe they entered early. So unless they have a pretty wide stop, they're probably going to get taken out before the move, especially if their stop loss is right here. They're going to be used as liquidity to fill more long positions. So I'm watching this here. It's called an inducement setup, where basically you have a raid, a shift, high probability order block with resting liquidity right above. That's probably going to be used for the long. This is where I'm looking to position. And again, if we keep in mind we're part of a daily market maker model, the target is going to be 348. The high time frame weekly cipher is 280. So both are positioning much higher. We also took out the sell side, so there's really no reason to keep dropping here. And you have a very nice liquidity arc right here. So maybe you don't target 280 and 340 yet. Maybe on the first part of the trade, you're just targeting into these highs. But ultimately, the idea is to be positioned down here. And this is how scalps turn into swings. So the idea is to take like a larger position if it's high conviction, take off profits on the way up. That way you could let the rest ride and still have pretty good size on the position on the way up, and just kind of hold that for the full range of the MMXM. So that's the setup for today. Fetch AI looks really good to me. Again, down here, everyone's scared to bid, but this is in fact the low risk buy within a higher time frame market maker model. So hopefully you guys get some good fills and we make some money. All right, guys, enjoy your Thanksgiving. Cheers.